Welcome to I Reads the News, the show where I read the news and tell you what I think about it. This week, the Senate parliamentarian ruled that the minimum wage should not be considered under reconciliation. This means that it would require 60 votes in the Senate instead of a simple majority to raise it. Politically, this makes passing the stimulus much easier since the minimum wage was going to be a major point of contention in the Senate. Interestingly, the House included a $15 per hour minimum wage in their package, even after this parliamentarian ruling. This was mostly performative, as it will definitely be stripped from the Senate version, but before talking a little more about the politics, it's worth looking at why this is such an important issue. When we talk about the minimum wage, we of course have to look at supply and demand. In this case, the supply curve is the red line, which represents the supply of labor or employees willing to work. The demand curve is the blue line, which represents the demand for work or employers looking to hire. What these lines show are individual people getting hired until the wage workers are willing to work for matches the rate employers are willing to pay, and that's the equilibrium point. If the worker demands more, the company will hire someone else, and if the company offers less, the employee will look somewhere else. The red area is the surplus workers get, and the blue area is the surplus employers get. For example, an employee may be willing to work for $5 an hour, and a company may be willing to pay $15 an hour. But if the wage is $10 an hour, they both receive $5 an hour in surplus. The minimum wage is a price floor that disallows transactions below a certain threshold. In this scenario, the worker surplus increases as shown by the red area increasing. At the same time, the traditional theory assumes that unemployment will increase since employment below the minimum wage is no longer allowed. This represents a deadweight loss, which is the green area. However, this model assumes that there is perfect competition in the market, which isn't always the case. This model assumes that there are a large number of buyers and sellers. This is not true in many areas of the country where, for example, a single Walmart employs a significant amount of the workforce and sets the wages in an area. This leads to the marginal cost of labor rising faster than the labor supply. What this means is that Walmart may want to hire an additional worker for $12 an hour, and an additional worker may be willing to work for $12 an hour. However, this would require them to pay all of their workers more because they are only competing against themselves in many labor markets. They have an underemployment of workers and are able to keep wages artificially low. In this scenario, a minimum wage could actually increase employment up to a point. Moving on to what people actually think about it. Raising the minimum wage is incredibly popular. A Pew Research poll from last year found that 86% of Democrats and 43% of Republicans want to see an increase of the minimum wage to $15 an hour. What is interesting is that the Republicans' view on this issue depended heavily on their income. There's also been a large shift in public opinion since the start of the pandemic. A pair of surveys saw stronger support from Democrats and independents, and now even a majority of Republicans support increasing the minimum wage. Of course, it's important to look at what economists are saying as well. There's strong agreement that the minimum wage should be increased, but economists are split on whether increasing the wage up to $15 an hour would lead to lower employment for low-wage workers in many states. Companies would have to pay workers more, which would decrease demand for labor, but people would have more disposable incomes, which would increase demand. There's a lot of uncertainty, and even when we do have a clear picture of what would happen, it depends on the area and the sector. This is why many economists think that the federal minimum wage should be pegged to local conditions, such as the cost of living. There's also a lot of consensus that raising the minimum wage would increase prices, but again, people would have the disposable incomes to handle this. And these findings align reasonably well with the CBO analysis of the $15 per hour minimum wage. They estimated that unemployment would increase by 1.4 million people, or about 1%. Even with this, 900,000 people would be lifted out of poverty, as 27 million people would see their wages increase. Overall, I think it's pretty clear that the effect of the minimum wage looks something like this. The only people who advocate against a minimum wage entirely are the libertarians who spent 10 minutes learning economics and then decided they knew enough for a whole life philosophy. Similarly, the only people who are arguing for a $25 per hour minimum wage are the people who say the money is fake because they don't understand it. We are also pretty confident that we are somewhere on this side of the maximum, but the difficult thing is in determining where the maximum point is. There are some cities that currently have a $15 per hour minimum wage and they've not seen excess unemployment. However, the job market in Seattle isn't a great representation of the entire country. It feels like the reasonable thing to do would be to start at, let's say, $10 per hour and then increase it by $1 per year until we start to see negative effects. But of course, this issue has become so political that taking a measured, data-driven approach wouldn't satisfy anyone. Going back to the politics of it, Senators Romney and Cotton put out a proposal to raise the minimum wage to $10 per hour. Their proposal would mandate E-Verify to ensure that companies are not hiring undocumented workers. Democrats would only sign on to any sort of immigration reform if it included a path to citizenship. It's hard to imagine 60 senators overlapping on a minimum wage at all, and it becomes laughable if you're also including any sort of serious immigration reform. Hawley has instead proposed an additional tax credit for U.S. citizens, and the U.S. currently has an earned income tax credit, which is incredibly effective at providing money to people who need it, and it should be expanded. However, this does not prevent us from raising the minimum wage as well. A tax credit would be beneficial at the point we start to see unemployment, but we are confident this wouldn't occur below about $10 per hour, and it may not occur below $15. Thinking about the power that companies like Walmart currently hold, an additional tax credit without an increase in the minimum wage would lead to the government subsidizing pay so that corporations can keep wages artificially low through underemployment. Going back to the other side of the aisle, it's worth noting that the parliamentarians' decision is not binding. Kamala Harris could simply ignore the decision or overrule it. Additionally, Senators Wyden and Sanders have proposed tax penalties for corporations who do not pay employees at least $15 per hour, and this would definitely be allowed under reconciliation. However, Senators Manchin and Sinema have expressed a desire to listen to the parliamentarian, and since they have also expressed a lack of support for a $15 per hour minimum wage, they're likely just to leave that at face value. All of this is to say, here we are over a decade since the last time the minimum wage was raised, and it will likely remain unchanged. Increasing the minimum wage would solve a market inefficiency to raise wages with little effect on employment. It's incredibly popular amongst economists and has majority support from every party. However, it will likely die due to a lack of support from a few key senators and will be ridiculed for being partisan when GOP Congress members make it so.